No. All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for September 30th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode 449. And so we're going to talk about the overall markets and some specific stocks, and then our guests are going to share their screen and tell us more about what they're looking at. And today we have Michael Filighera and Sonny Harris joining us, and also the option professor back to moderate. And but first, you should be seeing my screen here. And if you haven't heard of this, this is what I'm showing right now is Seasonax, and this is a cool little seasonal trend tool that I've been playing around with for a couple of years, and I thought I'd start sharing it with the timing research audience. So basically you can set different dates on this tool and see how the markets performed during those periods. So right now I have it set to S&P 500 for this week, September 30th to October 4th. And so this is the performance over the last 15 years. Now this is a very short segment. Most of the time you'd want to use this for, several weeks or a couple of months or at a time, but just for demonstration purposes, over the last 15 years, during this period, there's been an average annualized return of 47% almost, and 40% of the months were, or weeks during this period were would have been winning trades or up during that point. So, but you can see also around the 1st of October starts a more significant uptrend in the markets. Although where we are now, we've already had a pretty significant uptrend. So,
sure have.
So, this is one of those things where you look at the seasonal trends and try to find patterns there, but then you want it to match up with what's actually happening in the markets currently. So, so I'm going to turn it over to our guests and host in a second. But if you want to learn,
I do have something that I could add that
okay,
would help. I think Seasonax is a great instrument, by the way. But I think we need to remember that what it's really showing is the 10-year, the cycle. It's a cycle, so it's a time cycle, and that normally that the markets would be expected to cycle lower up until about the end of this week, which is October the 4th. And so what I have found in other ones is that I'm realizing that the market may have bottomed in that cycle a month early. So instead of being the very beginning of October, it actually was the very beginning of September. That's just a possibility. So
yeah, these cycles can show up earlier or later
than come in ahead of time or late. So this one would have pushed it, and because it's 10 years, coming in a month early is like really not that. That wouldn't be a good one to check.
And you can, some of these instruments go back almost 100 years, and then you can set it to only look at, presidential election years. And
yeah, that's a very big cycle, and you'll see you're going to get the same reading. Isn't that interesting? They were looking for the presidential cycle also to bottom just before the election.
Or do all these other things too. So it's a really interesting tool to play around with. And you go to TimingResearch.com/Seasonax, SEASONAX. You can learn more about the tool and get a discount on the subscription. So, all right. So here we are back at the S&P 500 currently, and I'll go ahead and turn it over to the option professor.
Okay, thanks. Yep. Okay, well, guys, Michael and Sonny. We are going to go in and start out with the S&P 500. So where are we at? We just hit the all-time high around 5,800. And what are you guys thinking? Let's start out with Sonny.
Well, it looks to me like it's going to go on up. I mean, we don't have much choice. We've got to go up to we are at the upper outer band on my sunny bands. We're above a gold upsloping DMA. It just says more up. The only caution I have is that on my histogram, we just got a red bar on today's candle, and that's a cautionary warning. So it wouldn't surprise me if it came down to the DMA at 5692. That's certainly a possibility, and then it would go on up from there.
Yeah. So it looks to you like a buy the dip kind of thing.
Yeah, I think we're going to head up for, pardon me, Dow 50,000.
Yeah. Well, they say don't fight the Fed and don't fight the tape. And now you're not only fighting the Fed, you're fighting the entire global central bank system because the easing is going on across the board. Michael, what's your feelings? Anything with the waves that you want to talk about?
Yes, I believe that we likely have, well, it's a choice of two, actually. Both involve a corrective phase. One could possibly bring us back down to the lows that we saw in August, and August the 5th to be exact. I think that's when they happened. And the other one would be that it can come down to just what Sonny mentioned, that just under 5,700.
Right.
And if it comes down and holds just below that 5,700 number, maybe, give or take, then the possibility of a very strong year-end rally. Now, seasonally, as David started this, seasonally, the market should find its low right into this window, right into the end of the week. Now, something that I will add, because it's been a big buildup, and a lot of people don't think it should have that much effect, but it will, is that it's the end of the quarter. And along with the end of the quarter, we have a very large JP Morgan collar that gets rolled out to December. Now, a lot of people say, oh, they've been working on that. They've really lessened that load. It's like, no, not true. Other people that join their party maybe have lessened that load. But JP Morgan does not come in and do a partial move. They move the entire collar. If they need to make adjustments.
What effect would that have on the market?
It's what it actually does. It releases a lot of the market. The S&P's been sitting between 5,700 and 5,800 comfortably, just kind of going back and forth. So that continues to fuel the risk on trade.
Right.
And so if we break below 5,700, then it's going to start to switch gears a little bit to continuing a trade that may not have any more legs to it. Now, what happens with the roll is, like, to me, as someone who follows the options flow, who follows the capital flow, JP Morgan basically sets for the SPX the ceiling and the floor, with where they're putting the call side of the collar and where they're putting the put side of the collar. Now, right now, the call side of the collar is 57.50. Notice that the ES dipped below 57.50. Now, they're trying to keep it so high above it because they don't want any problems with rolling this out. And so the other concept that, if you follow it, is that the roll usually moving forward is 3%. They do 3%, above, below 3%. And which would suggest that it's going to get rolled out to the 5,900 plus levels. Now, I think that, according to, it's like, if this thing gets the release of the gamma, gets the release of volatility, and we get some volatility back in, well, then it's the risk on trade, and it can keep it above 5,700. The risk on trade stays in place, and that will produce, I think, a really solid rally, which is what Sonny is seeing, and I could see if we come down and we correct, and then we would just blast out of that. but I think we would, and in that particular move, I think we can exceed 59, above 5,900. So I think what the market's now waiting for is like, well, exactly where are you going to put this collar? And I think actually they'll probably come in above 6,000. So I think the rally potential is there, and seasonality really dictates, as David did mention, that once we get through this little supposed October slump, it's green light. November is on a seasonal basis, a very strong up month. We might get a little correction at the beginning of December, but it finishes the year with a solid rally.
Yeah, that's the way the seasonal looked, and that's the way the vibe is right now. There's no doubt about that.
Yeah.
The situation here with the VIX, I got major support at 14, and right now I think if it gets to 18 or 20, it could surprise. That's when you're probably going to get that reversion trade you're talking about that would give you a buying opportunity before November.
Okay.
What do you see on the VIX there? You know, you're getting, because it looks awfully fat, like it's ready to do something. You see the RSI at the bottom is right at 50. So it's either going to turn down and we're going to get a huge rally here, or it might go into the 50s and up to the 60s. And of course, that would give you a reversion trade. So it's pretty binary right here, wouldn't you say?
Well, I was going to ask you, because what I've noticed in the VIX futures,
Yeah.
they have options that they're not trading, but they have listed options.
Yeah.
And at first they had a whole bunch, you know, like dailies and all the rest of that stuff. And now they're just two weeklies. One of them for this Friday and the next for the 11th. Now, but they're not trading. So I don't know if they're waiting to introduce them. But I noticed as well that suddenly a lot of premium gets put back into that October future. And we noticed that about a week ago. That suddenly it's like, oh, okay, we just rolled out, and they added all that premium back in. So I think here it's kind of interesting, but you're right. Here we are knocking on 20's door. I'm like, well, I would say that it's getting a little fat. And you're right. If we kind of come out, and I'll tell you, off of the September 13th low, it's 3 up. So we've been up already today. We reached a high of what, 1995 early?
Yeah.
And we've already come all the way back down to 1895, and now we're back in the middle.
Yeah.
I think it's just a lot of posturing for the roll. But I think that vol continues to go down, which is going to set up that continuation of the vol trade.
Now, Sonny, what about the energy shares? Put up XLE, because you know, everyone has pretty much bought every other sector. And if we're going to have China to really turn around, which is a big if, and if we're going to have all this, you know, shall we say, good times, then obviously the demand for energy, because 40% of the world demand is China, and this stuff is down in price, which is different than everything else on the board. Do you see value here in your sunny bands?
Not yet. It looks to me like it's going to, it wicked up and touched the dynamic moving average, which is flat, which is always a warning. Be careful. So I think it's going to touch the DMA again and then fall down to the lower outer band at 84.37.
Hey, David, on the side of the charts, it has like a percentage thing, not the actual price. Can that be changed to the price so we actually get a little idea of what? Yeah, there you go.
Yeah, I fix that.
Yeah. So anyway, yeah, there's nothing there for you on the sunny bands yet. What would XLE have to get to for you to maybe get some sun on your sunny bands?
Well, I think it's going to go down to the lower outer band right now. And then the way it's been behaving, it comes back to the dynamic moving average and falls again. I mean, this is a almost straight line down.
Yeah. This actually puts the China trading question for me a little bit, because if China really is going to have this big turnaround, they are 40% of global demand. Energy should be going crazy. Oil should be going crazy, and it's not. So
Right.
maybe, you know, this bazooka isn't all it's cranked up to be. But certainly, if you want to put up the China trade, FXI is a good way to do it, or BABA, BAVA. And you'll see what David Tepper was talking about on TV in that, especially on a longer term chart, these things were basing and basing and basing. And as you can see, they used to be a hell of a lot higher. And now you're up there pretty good.
Yeah.
And that RSI, I don't know, is that in rarefied air?
Yeah.
Yeah.
So anyway, it'll be interesting to see, but I've been talking to people about this for months, so this has been a very good pop for me. Let's talk about gold. Gold is pulling back pretty much to a level right here that it might hold and might be a good deal.
Yeah,
Keep
I
going.
think we're going up to 2,800. So this could be a good deal area. It has, no, it didn't quite touch the dynamic moving average, my DMA.
Mhm.
So it has a little farther to go down, I think, to 26, 21. So I think it's going to go down a little bit. I'm going to buy some more when it gets to that level.
Michael, what do you see on the gold?
Pretty much the same. I think gold and silver have extraordinary upside possibilities. And being that we're in new all-time levels, not necessarily in silver, but here in gold, and with what is happening, not necessarily mining-wise, but with central banks and the digitalization of their currencies. And speaking of, just to take a back step, what you just said, we're talking about prior, that in terms of China is already accepting payment in yuan for oil. So they're already, they're excluding anything that's paid in dollars.
Mhm.
And that's part of their battle that they've been trying to win for quite some time.
They're
is
also
want
not
to
letting NVIDIA, they're trying to get local companies to give the chips, not NVIDIA.
Well, not necessarily the chips. I'm talking about oil.
No, I'm saying with the oil idea that they're not going to take dollars, you throw in there the fact that they're telling NVIDIA, we don't want your chips, so we're going to go with the local guy, or they're
Oh, right.
encouraging.
Oh, yeah, maybe. Yeah,
That's a little bit more about well, fighting it back against tariffs.
true. But I think that what important is that this is something that's been underfoot for many, many years, and now is likely coming into fruition. And since they're backing it in gold, that's one reason why gold continues to just climb. But they want to dethrone the dollar. And
I mean, because when you get in trouble with the US, they take your dollars.
that's right.
Yeah.
They just kind of.
But then, of course, you got to trust the person that you're taking the currency from, and there's a reason why the dollar is number one, because of our justice system and
right.
Checks and balances. I don't know if you take the ruble in Russia or the Chinese yuan and you go down there and start making a big beef, you end up anything but in jail.
I agree. I do
So
agree.
anyway, with regards to gold and actually the stock market, when you look at the chart, it does have a scent of a reversion possibility. Now, obviously, the trends are powerful. All this news about central bank easing is powerful, but also the prices are already powerful. So the thing is what would, what do you think? Let's talk about percentage likelihood, or what you think might cause some kind of a drop. Sonny, do you have an opinion on what might cause a reversion in the stocks or cause a reversion in the gold?
In gold, I think we've got a sell signal, Sunny Bound sell signal. I think it's coming down to 26, 21, and then it'll go back up again.
Right.
I mean, that could just take a couple of days, or it could be a whole week, depending on whether it decides to go sideways or not.
Yeah.
We've got red bars on the histogram, warning of change of direction.
The only thing that could change the entire picture would be that the economy never slows, spending never slows and picks up, and all these cuts that they're supposed to do don't materialize.
Right.
That could be the risk off trade in gold and in the Bitcoin and everything else, because again, he did make it very clear. I listened to the guy. We're giving you 50-point cut right now, but we're not on a predetermined path.
Right.
And nobody heard that part. And so, and the whole market has this thing already priced for like how many cuts, 19 cuts or whatever. So that would be something that might change the landscape is if the numbers come in, like Friday's unemployment number could be strong, who knows? You know, then, and then of course, consumer spending has not backed off. Credit card spending has not backed off. Durable goods is now rising. So they're buying refrigerators again. And so, and real estate hadn't backed off to speak of, and the cars are, you know, still going. So, you know, all these cuts that they're thinking of, these guys could be diametrically wrong that they beat inflation. And if that's the case, that's the surprise that would get
For everybody.
Yeah, that would
for
be
all the markets. Yeah.
yeah, because again, the entire world is positioned for up. And I thought the China rally was one of the hugest short covering rallies in the history of mankind. And today there's not much follow, like that FXI isn't following through at all.
I actually watched the YINN, and that one, yeah, you're right. These gaps have been like humongous. And
well, Michael, you used to be on the exchange. If
yes,
3 years of people hedging and shorting for 3 years, and then they announce that type of package, which on the surface looks like it's going to cure all ills. How many people are covering their hedges and covering every short they have? Well, let me put it this way. The exchanges had to close, or they had glitches because they couldn't handle the volume. That doesn't sound like people are coming in.
In China, you mean that's what they had? Yeah.
In China, yeah. The exchanges, they had glitches to where they couldn't handle the volume.
Yeah. Oh, yeah. And that was evident. Yeah.
Yeah. That reeks to me.
Well, then wasn't it also on top of all that, Jim, that they also threw out some stimulus?
Not yet.
Oh, they're threatening the stimulus?
Yeah, well, and there's, I think later, you know, first of all, everyone's going on holiday for a week called Golden Week this week. So obviously, if you announce something like that last Wednesday and everyone's going on holiday for a week on Friday, nobody's going to go short over that weekend. You know,
I would agree with you.
So the thing is you know, what they're doing is they got real estate help with refining mortgages, with lower down payments on second homes. They're trying to get this unemployment going a little bit with digital jobs. They are trying to give the banks money to buy stock. They're giving the banks or the brokerages money to do buybacks.
Wow.
So they got Americanized pretty quick, you know, and when you think about it, they never really eased after COVID. So that's why, you know, this is so odd. What's going on there, we did in 2021, 2020.
Right.
So that's why they're really doing what we already did 3 years ago.
Yeah, in a way.
But again,
but we know, we know the answer to an economy based on, you know, constant.
Well, like I say, this is also an artificial thing.
Yeah.
You know, and the last thing people are hoping for is they have like 40 million unsold homes. And so they're hoping the government will come in and buy all that. Now,
you know, the whole thing's going to be interesting, but I think a lot of it, Jim, is it's speculation.
Yeah, it's speculation, and I don't think the government's going to get to buy up all those homes. They've got a real estate mess.
No, they do, and it's much easier to get a short covering rally started than it is to turn the real estate market around.
Yes.
Especially when you know the whole planet's short, and there's a holiday coming up. This is a good time to lay the bomb of we're going to do all these wonderful, wonderful things, and the whole world's going to change, and everything will be fine.
Mm-hmm.
Yeah, I mean, even for ourselves, though, I think it's like, yes, if we're talking about China, yeah, I think it's like it is a massive short covering, and maybe it kind of, you know, today was like, and YINN was the third large gap, and we all, you know, those who trade gaps or no gaps, it's like, well, you get the start, the middle, and then the exhaustion.
Well, I think we're doing the exhaustion, and it's going to go down and fill that first gap.
Exactly. But I don't know about the first one, but definitely the second one, maybe.
Well, the second one's pretty far down. Oh, I'm counting backwards. I'm counting.
Oh, okay. I got you. Oh, yeah, that one. Yes, I think they could go and fill that gap, and it's just a pullback then. Yeah. It's just a pullback, and then we run again.
Yep.
So I think that a lot of these products will go over the highs that they just made today,
Mhm.
overnight. And so you might be right, Jim. And in fact, it's like if they get a week holiday, then everything stays quiet, and it's just who's left over here or whatever, trading in between. And then once they restart, they start the whole thing over again and just start going up all over again.
One of the best sectors, and I was fortunate in the options alerts to have one of them in there, was Las Vegas Sands, LVS, because just like here, what happened here? I'm telling you, because I live in Las Vegas. Once they got those stimulus checks, those hotels and casinos were chock full of people, and
Yeah.
they're giving out stimulus checks over here too. And they're going to be sprinting down to Macau. So I thought it looked pretty good down there in the low 40s, and the call options, obviously, in the last couple of days have exploded about as good as you can get. It also
Right.
just filled the gap, though. So this again might be a neighborhood where it takes a pause to refresh. Huh?
Jim, what's the symbol for sand?
LVS.
LVS.
Las
Yeah, and
Vegas.
they're in Singapore and in Macau, so they left Las Vegas, so it's a real Asian play.
Hmm.
But
It's all fascinating. And then on top of it, Jim, we can't forget that in approximately a month from Saturday, we have an election,
yeah,
a very huge election.
it's gonna be a zoo. I don't know why anybody thinks it would be anything other than that. But since we're anticipating that, you know how it goes. Maybe it'll be calm.
I don't think so. But then toss into it that North Carolina, Georgia, two toss-ups have been devastated by this Helene.
My family in Asheville, North Carolina, all the roads are all flooded. All the roads are closed. They don't have any electricity or water.
Right.
Is that from that storm that just went through?
Yeah.
There's a little
Yeah.
hurricane.
Yeah.
Yeah, my buddy lives in Atlanta, and he said they got a hell of a lot of rain, which is really shocking because the storm obviously came in from Tallahassee, and that's pretty good power to go that far. Normally, when it hits land, doesn't it slow down?
It did, but it slows down and picks up more rain.
That area of the country is not exactly mountainous, so
No, it just kind of flies over it.
Yeah,
Where my family,
But there's that, and so I don't know what the fallout from all that's going to be. What it's going to cost FEMA? What just on and on and on and on. We have all these unknowns back into our formulas.
Yeah.
And
let's hit one more thing before I turn it over to Sunny and let her describe some of the stuff she can do for people. Let's put up the Bitcoin, because I'm a real believer that 65,000 number is real key. I mean, if you start trading 67, 68,000, I think it's home free. But this is like a couple of times it's been up here, and I don't know.
They kick it back down.
Yeah, that number is a good number to use as a line in the sand, I think.
Yeah.
so there's a trend line that goes over the top of these prices on Bitcoin, and it went out above the trend line, and now it's back down to the trend line.
Yeah,
So
so this neighborhood, well, this 60,000, using round numbers, 62,000, 65,000 ballpark area, that's really the zone. So if you started getting a 5 handle on this again, it would be stick a fork in it, wouldn't it? What are you showing? Okay, so let's switch it over. Well, let's get your opinion. Michael?
On Bitcoin?
Uh-huh.
I actually think Bitcoin's going to hold pretty much. It should stay above 63,000, do another run up to really excite them once they get past 65. I maybe head up towards that 69, 70.
Yeah.
And maybe we don't make it past there. I think that the longer term projections for Bitcoin, well, what again, it's so interest rate sensitive and it's so dollar sensitive.
Yeah.
Well, how many people want the dollar below 100? How many people don't want it below 100?
Yeah, because if it's under 197, it's in the abyss.
I agree.
Yeah.
I agree.
Let's put up the dollar index, DXY, I guess it is.
yeah,
The dollar index suggests that we're going to 90, in my opinion. But we fail to really kick it down. And
I like
I don't know if
divergence, though. What about the divergence down there on the RSI?
Yeah.
If the word got out that they're not going to be cutting as much as they're supposed to be cutting, the dollar
ain't going down anymore.
Yeah.
No, I agree. I mean, there's just too many things. And that's one thing that I heard about, because Friday we get, non-farm payrolls.
Right.
So we get what the unemployment rate's going to be. And so the switches come from like, well, we got to pay attention to PCE, we got to pay attention to all this inflation data. And now, oh no, now we need to pay attention to the employment data, because that's going to tell us, will we get another cut this year? Now I'm like, well, I love the way that they want the market to hang. They want the investing public. The market does not hang on every little thing like they're trying to get the public to do, because the public is the one that's going to foot the bill to push this thing higher again.
Right.
So to me, it's like, traders are like, no, I'll make money no matter what happens. So because we're quicker and we can make the adjustments. But I think that they're trying to feed the public just a hope, a whim, and a prayer instead of just letting it be. And so for me, the dollar index is the dollar index. And I think that as long as it stays right around 100, we go nowhere.
Yeah.
Yeah.
And a
It's
break
on its way at
below,
100.
we start to tank.
Yeah, it's really ugly if it gets under there. Oh, one other thing, if you want to throw up real quick, the yen, supposedly they're going to be hiking rates, and so that yen could have a lot. It just already spiked up, so another thing of where you buy something that's low and then it gives you some good move is another example of it. Yeah, you see how lousy it looked, and then all of a sudden they talked about raising rates, and that's a pretty darn good move.
Wow, that's a
And if
really
you go to a
huge,
longer
that's a
term
huge
graph,
move.
yeah,
That's
if
a
you do a
huge move.
longer term graph, do you think yeah, there's a lot of real estate.
Yeah, but for the talk for such a long time, we had that one really nasty move, which again was in August,
Yeah.
and they
Look
were
at that, look
expecting.
at that divergence though, Michael. Look at that divergence.
Oh, I don't disagree with you
I
on
mean, you
all
got
of
a
this.
great buy signal there just off that divergence.
But I read a lot of analysts, and I don't know the quality of the analysts. I was just reading that many felt that round 2 of the yen trade, liquidation of,
Yeah.
would come on over Labor Day. It didn't.
Yeah.
And the fact that it didn't, I think, produced the rally that we saw for the balance of the month of September. And so are they holding out and they're just not going to do it yet?
Well, he's
So-
asking for a flash election or whatever it's called. But anyway, I was going to say, let's move over to Sunny. Sunny, take over the screen. Put your Sunny bands up there if you would, and give us a little better idea of how you help people every day.
Can you see my screen now?
Yep.
All right. So I'm a mathematician and a programmer and an author, but most of all, a trader. I've been trading for 43 years, be 44 in January, and I love to teach people how to do what I do. I do easy language programming. I've written 8 best-selling trading books. I do Sunny Side of the Street commentary every Sunday night if you want to join that. And I do a live trading room every morning from 9 to 10 California time. So if you're interested in seeing me do it live, give me a call or send me an email, Sunny, SUNNY @moneymentor.com. And that's my favorite thing to do these days is that live trading room.
Do you want to throw any trades up there on maybe some of those Magnificent 7 stocks you like and see how they look on your Sunny bands? Start
Sure.
out with Apple's doing pretty good. It looks like people are running into it as a safety trade.
And that phone didn't cause a big rise in the stock price. I mean, this is
No,
the,
but it's moving a little bit now, and holiday season coming.
well, here's the phone announcement. And then now it's been going sideways ever since.
Isn't it up about $4 today though? No.
Yeah, it is.
It's up 401, 402.
Yeah. So holiday coming, people are coming into it.
Mhm.
Your support, where's your support there with the purple and gold?
It's at, come on, 226, 225 and change.
So that'd be kind of your line in the sand if you were trying to take a
Yeah,
shot.
if it goes down to there, we're wrong. But it looks like this sideways activity produced an up bar and it's going to keep on going up. It'll go at least to here. which is the top of this red candle right here.
How's the Amazon looking? AMZN.
Coming down. It's testing the DMA. So you see it's come down to the gold and purple lines, and
Where's that at? About 185?
Yeah, 184. It should bounce off this and go back up. That's usually what a flat DMA does. Especially with gold on top. We've got the gold line on top, so we're looking where biases to the upside, and it should bounce there and come up to here.
Yeah, this would be another one with the holiday coming, everyone buys off Amazon,
Right.
You know?
Right.
What about Google?
Oh, it's not doing very well. It feels sick. We've got a nice run up, and then we've got this lawsuit that's threatening them, bringing it straight down. It's done a little recovery since this point on the 10th of September. So we've got a little recovery going on. And we also have a little green bar that went above the upper outer band. So it could easily be turning, or it could come right back on down.
It looks like a place where it could be binary, like either go up towards 185 or go down back towards testing 150. Yeah. These are the ones I kind of look for when I'm doing the strangles, where you do a call and a put at the same time. Something that's in a place where it could be very binary and the options are pretty reasonably priced. So this would be a candidate.
Yeah.
Yeah. With regards to the NVIDIA.
Oh, that's my favorite one. And it's down, but it's bounced off the DMA. You can see this green candle bouncing off the DMA. We've got a trend line though, from here to there. So that's putting pressure on that. So it's going to have a little difficulty getting above it. But once it gets above it, it's all bets are off. Look, there's another trend line right here. So that's the constraint. So I think
one more down leg into that bottom trend line, then explosion higher.
Yeah, that's what I think.
Yeah.
And what about ARM, ARM? That might have potential.
What a mess. That's just really choppy.
Yeah.
Wow, yeah, it's going to have to come down to the DMA at 137. It's at 142 right now, so we've got 5 points down it could go. And we've got higher lows right through here. So it could come on back up.
But it's hitting resistance right now for sure, right?
Let's put a Fibonacci on there. So it looks like it's going to come down to the 382 and then bounce up to the what does that say? I can't read. 61.8.
62%,
Mm-hmm.
basically.
Which would be right here. That's not a whole lot to go up. But
and, another stock, Super Microcomputer, they've got a very bad thing going with the DOJ, but people are saying the estimates are being raised by the analysts, and they're expecting 200% increase in sales, which is better than NVIDIA.
wow.
Is there an opportunity when this thing went down the other day? I think it was SMCI.
Oh God, it went down to like 350 or something.
Yeah, look at
It's
that.
still in the toilet a little bit, but
It's worse than
too early to stick your head in that buzzsaw.
Yeah.
You can see why it stopped though. Former highs were there.
Yeah.
So
That's what I call an attractor.
Yeah.
And this thing looks like it could bounce and go on up to the upper outer band at, what is that? 686.25.
Yeah, that's what I'm saying. When you hear bad news and something is way down, but the company has 200% increase in sales, it might not be a time to run away from it. It might be time to run toward it.
Right, right. I wouldn't short it.
Yeah. Newmont Mining, just to see if the gold stocks are turning at all, because they're having a weak day today. Is it just a little
Symbol.
NEM? NEM? Yep. Because they've had a big run. Does it look like a party over a little bit, or just a little pullback to the green, to the purple and gold?
Well, it's certainly pulled back to the DMA, purple and gold. And I think it's gonna dip below here just a little bit like it did over here and again over here. So I think it's gonna dip a little lower than the DMA and then go on up some more.
And what's a ballpark number on that where the gold and purple are? 53? No, I mean, 50?
5308.
Okay, so it's not going to give up too much real estate here then, huh?
I don't think so.
Yeah. And it's certainly been a good deal. That's a good looking chart, huh?
Do they mine any gold?
Well, they're the biggest miners of gold. They bought a company in Australia. So they're the Cadillac for the gold producers.
So they're
So that's why, I mean, that's why,
rising on the price of gold.
yeah, basically, this is how you play gold in the stock market.
Mhm.
All right, Sonny. And so did you tell everybody how they can get a hold of you?
Moneymentor.com. I'll put it in here, www.moneymentor.com. And it's Sunny at Money.
And you have the chat room every day?
I do.
So,
And
yeah.
I'm the only one I know of that does this. There's my cell phone. So if you want to give me a call and talk about trading, I'd love to hear from you.
Perfect. All right, Sonny, we'll let you go, and we'll see you next time. Thank you very much for being here.
Thank you. Thank you.
Okay, we'll talk to you soon.
Thanks, Sonny.
Okay, it's over to you, Michael. And I was wondering if you could start out by putting the S&P up and giving us your take on Fibonacci and Elliott wave, because you really have so much experience in that area, and I always find it fascinating how the projections look and that kind of thing.
Okay, let me just, the chart is up. Let me put that over there because they always tell me don't show that. And I was looking at Bitcoin, and we'll go over. Do you want SPX or the?
Yeah, just go SPX. Everything will be derived off of that.
I actually think that the way I've got this labeled, and should follow me over. I could boost this a little bit. No, I'm not going to go far on that. That let me go out one more. Let me go out to my weekly. On the weekly chart, I'm counting off of that October 22 low that we're in a primary fifth wave up. Within the primary fifth wave, we have 5 waves of intermediate degree. They're labeled in yellow, of which we've only completed 1 and 2. So we remain in the process of trying to get up to complete the intermediate third wave, which projects here to here. So what I'm kind of caught up in is that we finished up the minor third wave, and we were going to do a minor fourth wave. And this kind of happened too fast to be all of that correction. So I've left open the possibility that it's only A of the minor 4, B of the minor 4, and we're still going to do C wave down. Now, if it's going to do that C wave down, they got to get it going pretty quickly here. And it's got to drop really quickly here because we have seasonality factors coming in starting at the end of the week.
Exactly.
So the other side of that coin is that, okay, this is the completion point for minor 4. And then what we're really going on, and I'll open it up and I will, maybe go a little bit out to my 4 hour and open it up. And then come out and go like, okay, ABC 4. This is 1 of 5 because we're looking for minor 5 up to complete that intermediate third wave. 1 of 5, 2 of 5, and then we do 1, 2, 3, 4, 5. As it was always at the third, I'm like, no, Now, here's the catch, Jim. If this is only this small wave one of this third wave, well, we likely are going to end up here.
That's where you get your 6,000 on the S&P.
Oh yeah, 6,000, I think, could become minimum
Yeah,
for wave three.
yeah.
Or maybe, but see, I'd have to probably recount this because it's just, to me, you know, it has to be larger than here. And it can do that if I get it up to here or here. Then I can get 1, 2, 3, 4, 5 and call it the completion point for wave three, do a small 4, and then we start cruising again towards year end.
Yeah.
I think year end I think it could be very explosive. Now, here's the other thing. If we're finishing an intermediate fourth wave, I'm going to go back out to that weekly chart. And let me go out to the 5-year weekly chart so I can add more time. What we're looking at is that from wherever this is to wherever that ends, that's what's going to correct. So we'll be correcting from 35 or 34.91 basis the cash market up to where, let's say, it gets to 63.40. That's a lot of correction. And you can run the math. You can do 38%. You can run to 50%. We're looking for a fourth wave down. Now, granted that it's just going to be a fourth wave. It's not the major top.
No,
but
but let me ask you something real quick. There's a guy from Stifel, whatever they're called,
yeah,
was in the paper or on the internet or whatever, and he said that they think there'll be a 12% correction in Q4. Wouldn't a 12% correction take us really to retest the August 5th low?
yeah,
And is there anything now, would that be that fourth wave pullback that you're talking about?
it could be this. It could be the minor one. Yes. Let me bring it back down so we can see that. This low is August 5th. And the cash market got down to 51.19. This is the support zone for the balance of this. Now, because this has gone up above that high, what we need to run then, and I'll show you that one, it's going to be extensions, but we're going to take it all the way up as if it got up to here. But if I took it up to this high, which is the existing high thus far, and that completed the move, and we start coming back down there, see that? The Fibonacci relationship turns because it went up and it went above that high, so it's an irregular B wave, we call it. And when you're using an irregular B wave, what is the Fibonacci retracement level? It's 1.618. So we would blow this out the door and possibly come down to here. Minimally, though, I would look for it to come down to at least 5,100, let's say.
Yeah, right around a retest or a little lower than the low. And look at
Right,
that
because on an
RSI, and
options
look at that
basis-
RSI up there, Michael. Look at that RSI. Would it be shocking if the RSI dropped after being up there like that?
No.
So that's why I'm looking at the VIX. If the VIX goes above 18 or 20, and this is RSI starts rolling over, and you start breaking under like 5,700 or 5,730,
That's a trigger.
that could be the trigger. And
That's a trigger. Now, just also just in dealing with the levels that I follow, like the options flow, the gamma, and the capital flow, 5,700 is still what we would consider a volatility trigger. Now, if they trigger that volatility trigger, then what that starts to do is shift risk on over to risk off. And then it's doing exactly what you just saw. Because now what all of these dealers and a lot of these traders have to do, now they got to buy volatility, buy the VIX, and get out of the volatility that they bought in all those underlying stocks. And so that reverses the whole trade.
When they sell calls or something, they have to buy stock, the market makers, right? So if the people are buying puts and the market makers selling the puts, do they short stock?
Well, on this particular trade, when it's the risk on trade, they are selling the call and buying the put. So they need to buy, because on the risk on trade, who's ever doing it is buying the call and
no,
selling the
buying calls
put.
and selling puts. Yeah, so they're on the opposite
So
side.
they have to buy.
So the market makers, who I'm always a believer in, come out on top ultimately.
Oh,
They would love to see a correction down to 5,100, just like when they were buying on August 5th. They were
yes.
very happy to see this rally here.
Well, because they get to reverse their trade, they get to make up all, or they get to make
Yeah.
all their money.
Yeah.
So sure, absolutely, because we're volatility traders.
Yeah.
So anytime we get that shift in volatility, we're all very happy. As a market maker, you're very happy. And we're not stuck on a position. Market makers are constantly rolling, are constantly adjusting. That's the whole nature of the game.
And it could be, I mean, buy the rumor, sell the fact. I mean, we have a very big buy and we've been going up very steadily here, except for that August 5th for a long time.
Yeah.
When you've been going up for a long time, that means there's a lot of people in there, who have money.
Right.
And if they hit the sell button because we're getting in front of an election that looks like it's out of control, this would be the month there would be vulnerability.
Right. Now, the one thing that I will add, I agree with everything you're saying, but again, today, the big roll, we got the JP Morgan roll.
Yeah.
And like I said, I think that resets the floor and the ceiling.
Yeah.
In terms of like, how are they going to hedge their biggest hedge funds? That's all they're doing. And they're just doing it to the end of the year. So what are they predicting then for the end of the year?
But when you're saying it's a collar, you're saying they're going to put the ceiling at 5,900. Where are they going to put the put?
Oh, the puts would probably be at 5,500.
Okay, so they have a pretty wide window.
It is a wide window. Like right now, it's 57.50.
It's basically
and the
a
put
black
roll is
swan.
at
It's a black
5,300.
swan deal, yeah.
It's about 400 points.
Yeah.
So again, if you're still using that 3%, then it's 59 plus change, whatever it is, and it's 55 plus change. But to me, I'm like, well, if I was really working at JP Morgan and I would come in and go like, guys, you both are going to get challenged.
Yeah, you could get.
Is that what you want, or are we going to have to widen it, or are they going to surprise us and really put it in tight because they don't think the market's going to go beyond? I don't know. So I think we're in for something really kind of interesting finally for our year end, because what is the storyline right now? The storyline is like, oh yeah, rate cuts, they're all coming. We got more coming next year. They talked about it. We love it. We love it. And we have year end rally, blah, blah, blah. I was like, well, what happens if we don't? How's that going to rattle the cage? I don't know, but I always kind of, not that I'm a contrarian, but I always want to, I actually am, because of an options market maker, you're a contrarian.
You got to be.
Well,
when you say contrarian, what you're also saying is volume only takes you so far, and it does have a end game. So like on August 5th, the volume was everybody wants to get out. And so obviously the market maker drops the price to 5,100, grabs all that stuff. He knows the volume's going to dry up and it comes back up. Same thing would happen with the FXI, I think. On Thursday and Friday, every Tom, Dick, and Harry is covering their shorts that they've held for 3 years. The market maker says, you want to buy FXI, it's $35 a share, even though it used to be 25. And are you all done? Are you all down now because you're going on this Golden Week holiday? Well, then it can't keep going unless new buyers are interested in $35 FXI.
Right. Right. So, I mean, no, I agree.
See, right now you got to find people that are interested in 5,800 to start their long positions. And that's what
there are some that are.
That's what I'm trying to say, though. Here's the deal. On the bull side, obviously, you don't. Ray Charles can see that the thing's going through the roof, and all the news is Fed easing, and all the news is great. Okay, and traders, they don't care that the Fed's not going to drop interest rates for a year back in 23. They just know it's going to happen. And then maybe with this earnings season, they could have lousy earnings and it could still go up because people are going to say, well, forget about this. The future is bright.
I know, but to me,
but
I'll tell you, as a market maker, I will continue to sell you the premium.
Well, I'm saying, like I say, that's the bull story and it makes some sense. But the bear story is that we've got to find people who want to start a position at 5,800 before the election. and we got to find people who want to buy the RSI up at 90 or 80 or whatever it is. We got to find people who want to short the VIX at 16
before an election.
Before an election, And, the crowd might say, you know what? I think the VIX is going to spike into the 30s. You know what? I don't think you can find a lot of people who want to initiate longs before the election in October. And, so
Right.
I think there's vulnerability up here in a bull market.
Right. No, it's going to be interesting, Jim.
Yeah.
I want to do the show with you before the election.
Oh, that'll be fun. That'll be fun.
I think it would be very enjoyable.
All right. You want to tell people how they can get a hold of you, Michael?
Most certainly. You can get a hold of me at michael@mjf1partners.com. And like Sonny, I have over 40 years experience. She's got a couple more than I do. And I've also been an Elliott wave analyst since the late 80s. And that's the 1980s. And I produce a daily update, a daily Elliott wave update on the S&P 500 and the NASDAQ 100, and I post those on YouTube. And then I do a weekly update on the same, and in that one I include the cash markets plus the futures market. During the week, I just redo the futures market, and I post those also on YouTube. Coming up, hopefully, keep your fingers crossed, November, I will be switching my YouTube channels to membership channels. And within that, they'll be getting a lot more data because I'll start including the seasonality data. I'll start including all of the data that I receive from Spot Gamma, who I think are just like some of the most incredible mathematicians and model makers that I've seen in a long, long time. And what we're doing there is we are following the options flow. And Jim, as an options trader, so goes the option flow, so goes the market.
Mm-hmm.
And so the statements that are being made is that options used to be considered the derivative of the stock or the derivative of the index. And I think it's now the other way around. Options are in control of intraday moves and even the longer term moves. So.
All right. Well, people should get a hold of you for that. Let me just wrap up with the option professor. I'm Jim, the option professor, and I've been doing this for a long time. So I created something I think of value. Most people out there, they need education, meaning they need to know a lot more about options, and they also need some option ideas. So I've killed two birds with one stone with the options alert service. The first thing you get when you sign up is an options masterclass, 3 sessions, 6 hours, comprehensive education. Then you get the option ideas, and they include a lot of strangles where I do calls and puts at the same time. I think we can say that the volatility ahead between now and the end of the year could be either way. So I think these strangles could be quite interesting to get. Also, I give a market commentary. So I give you my ideas on the stock market, the commodities, gold, oil, the international markets. I've been telling people for a long time about these internationals, and they've really paid off lately. So in any way, I think you can have the way to get signed up. It's pretty simple. You click that link, and then it's we're giving $100 discount to everybody to get started. So it's $97. You walk away with the options class, and you walk away with a month worth of information that I think has value. And then after a month, if you don't like it, you hit unsubscribe and you're done. You get to keep the class, and the class standalone goes for $397. So this is a good deal. And like I say, the link will be up there. You can click it and get started. I just sent out a new one on Sunday night. You can get that. And of course, the masterclass comes to you the same day that you sign, as soon as you sign up for the $97. So like I say, if you don't like it for whatever reason, you unsubscribe, you walk away with a class and some, hopefully some decent ideas. All right, David, that's it for me. And Michael, thank you for being here. And we'll do this again. Like you say, before the election, looking at these waves will be fantastic.
It'll be fun. Thank you.
Okay, back to you, David.
All right, great discussion again today. So just a reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to access this show as soon as I can get it posted, as well as any of the past shows and presentations. And I just want to thank my guests again for today. Sonny Harris of MoneyMentor.com, Michael Filighera of Logical Signals and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.